Ashish Kyal joining us on the show. Very good afternoon to you, Ashish. Thank you so much for joining us on ET now. And the first stock that you've taken is RBL Bank. This one, actually, despite being troubled in between, you saw the stock actually give a very, very solid recovery when it comes to the stock price. Do you think this recovery will sustain, especially during the earnings season?
It looks like that, because if you look at the overall banking stocks and the banking index, that has been moving down. But RBL Bank has bucked the trend. It has managed to be one of the first counters to be on the positive side. It is now also lying at the 20 days and the 10 days moving average juncture. So the overall outlook looks to be bullish to me. I think the stock can head towards the level of around 275 on the upside, with support of around 235 on the downside.
Keeping an eye out on the levels over there for RBL Bank. But let's move on, talk about VIPRO, again an IT company that is in focus. It's under pressure after its numbers that came in as well. And we have a note that came in from Citi as well. They're maintaining a sell rating on VIPRO. They've cut the target price to 360 rupees per share from a previous target price of 385 rupees per share. Obviously, there was a weak performance that was once again delivered by VIPRO. They have been delivering a weak performance in the last couple of quarters as well. When you look at it in terms of the Q3 CC revenue guidance also, that's at a negative 3.5 to negative 1.5 is what the company said. Now, overall, in terms of forward-looking indicators also suggest that there is going to be a challenge going forward as well. Maybe that's a concern that is coming in even for the markets, and that is why Citi also is maintaining a sell. There's a lower FY24 estimate for them for around 7% is what they're keeping at, and also keeping an eye out on BOFA. They also are maintaining an underperform rating. They said for VIPRO with a target price of around 250 rupees per share. Other than that, in terms of what management commentary is coming in, they said that Q3 follows might be higher than the historical average. They're seeing a slowdown in the discretionary spends and do not see much of a change in terms of the demand environment from last quarter. And they will roll out the wage hikes from 1st of December and cannot commit anything on time type on onboarding as well. Deal pipeline continues to remain strong. But yes, overall outlook for the second half is also not something that is very exciting that has come in from VIPRO. So keeping pressure on the stock because of that.
Alright, then VIPRO for you, but let's talk about Shoppers Stop, and that particular counter was declining in trade last time I checked, and the reason for that being is the earnings. At one point in time, the stock was down above 6% or so. Right now, it's seen some steady recovery of 1.5%. The company reported actually an 82% decline in their quarterly net profit, while the revenue from operations saw an uptick of as much as 3%. The company reported in its earnings that the consolidated, like I said, it is down about 83% or so, while the consolidated revenue was higher by about 2.6%. Sequentially, the net profit fell about 81%, while the revenue saw an uptick of about 46%. If you see the commentary, the company said that it will invest about 4 crore rupees in Pahadi Goodness through the special purpose vehicle, that is Global SS Beauty Brands. The company also said that it added the additional investment for acquiring about 17.67% more stake in Pahadi Goodness will be through the fresh issue and purchase from existing shareholders at a total consideration of about 3.53 crore rupees, and the stake acquisition will be completed by June 2025. So there are multiple news flows, but yes, the earnings were pretty dismal coming in for Shoppers Stop. The stock is now making a recovery in trade.
Okay, let's move on and then talk about Paytm, right? This one hasn't been in focus for some time now. We have a couple of brokerage notes that have come in this week as well. But Ashish, Paytm on the charts and technicals, is that looking interesting at the current levels? Would you suggest a buy for Paytm now?
Yes, if you look at Paytm, the stock has eventually steadily moved higher, and right now, after a dip that we saw over past 3-4 days, it is now again getting ready to inch on the upside. I think the stock can move towards the level of 1040 on the upside, and on the downside, the support for the stock as per price action is around 930 levels.
So that's the take coming in on Paytm. Shesha, let's move to you and let's talk about Indo Remedies. You managed to catch this one early, isn't it? Today only it reported its earnings.
In fact, it reported its numbers a couple of hours ago. The stock is at the highest point of the day, holding up with gains of nearly 2%. Although on a year-on-year basis, numbers look weak, sequentially the numbers are very strong. Revenues for the quarter gone by stood at 482 crores, which is an uptick of 13% on a quarter-on-quarter basis. Margins too have expanded in the quarter gone by. EBITDA margins have come in at 14.8% versus 14% that the company had reported in the previous quarter. So sequentially 80 basis point margin expansion is what we have seen. So as I mentioned, sequentially numbers are strong, although on a year-on-year basis they look pretty weak. The stock is holding up at the highest point of the day, gaining nearly 2.5%.
Okay, that is Indo Remedies and focus on the back of its numbers. But let's move on and talk about a stock on technicals. That's Varroc Engineering. And Ashish, Varroc Engineering, what's the view on this one? Where do you see it headed from here on? Where is it that, at 496, is it still a buy for you? Today, the stock is buzzing in trade as well.
Yes, indeed, it is a buy because we can see that it has been steadily rising for over past 1 year. There was a consolidation over the period of 2 to 3 weeks that we saw. And I think there is going to be a positive breakout above that 520 mark as well. So one can anticipate the breakout here and can go long at the current level, expecting a target of around 550 as per the pattern, and maintain a stop loss of days low, which is around 470 levels.
All right, Lisa, let's talk about Bajaj Auto then. This one is zooming away in trade today on back of its earnings. What are the brokerages saying, and exactly were the numbers that great for that zoom?
Yes, rightly said, it's zooming away in trade, and that is because they have reported very strong set of numbers. In fact, it's the highest ever record high quarterly results, and even the EBITDA that has surpassed 2,000 crore for the first time. And what has stole the show is the three-wheeler segment. It has done really well, and the improvement in exports also has been seen on a sequential basis. Margin is at around 19.8% versus around 17% seen last year, and that is because of better realization and also better product mix. And the management said that the exports will make a gradual recovery going forward, and also, they see a positive outlook on the back of domestic festive sales. Now, brokerages are also upbeat about the stock. BofA has maintained a buy on the stock, and they have hiked the target price to rupees 5,950 from 5,550 earlier. They say that three-wheelers stood out, good festive guide, as well as the new launch ramp up, especially Triumph. And three wheels, with that being set in motion, there is a scope for re-rating in the valuation. So that is why we can see Bajaj Auto is surging away in trade. It's up around 6% as we speak.
Okay, that is Bajaj Auto for you all. But let's move on and talk about steel stocks. Ashesha, you track the sector. Why is it in focus? Tata Steel, JSW Steel, JSPL, all of them.
Well, yes, the entire sector is in focus today. In fact, the Nifty Metal Index is the biggest sectoral loser in today's trading session. The World Steel Association has gone ahead and cut its steel growth guidance for the full year, FY23, from earlier 2.3%, they've cut it to 1.8%. They say rising interest rate environment and rising inflation is impacting construction and infrastructure activity across the globe. However, India continues to be a sweet spot. India steel demand grew by about 9% in calendar year 2022. However, it is expected to grow at 8.6% in the current calendar year and will grow at about 7.7% in the next calendar year 2024. Centrum, meanwhile, believes that China will remain uncertain depending on the policy direction to tackle economic difficulties. World Steel Association, however, has gone ahead and cut growth guidance for the full year across the globe, but India continues to be in the sweet spot. All of these are in focus today on the back of this news.
These are in focus on the back of the news flow coming in, so keeping an eye out on that one. Let's move on and talk about another earnings candidate that is in focus, that is Oracle Financial Software Services. Now, this IT company reported its numbers yesterday as well, and when you look at it in terms of the numbers that have come in, seems like a bit of a weakness that has come in for the stock today after its numbers as well. On a year-on-year basis, when you look at it, yes, obviously there's growth, but otherwise, when you're comparing on a quarter-on-quarter basis, when I look at the numbers, what has come in is that revenues from operations, that's seen a decline on a quarter-on-quarter basis, and the revenues of the company have come in at 1,080 crores versus 1,117 crores last quarter, so decline on a quarter-on-quarter basis in terms of revenues. When you look at the profits of the company, that has come in at 393 crores versus 454 crores last quarter. So clearly we're seeing some pressure coming in terms of the numbers on a quarter-on-quarter basis, and that is what is keeping the stock a bit subdued and trade down almost 2% as of now as well.
All right, so that is Oracle for you. That is also moving on back of its earnings. Remember that it is earnings season and you have slew of numbers coming in, and we are not complaining at all, especially on the show Market Fatafat. But Ashish, Hero Motocorp, how is this one looking on the charts to you? Do you think it will replicate the performance of Bajaj, at least on the charts, or do you think that this one will remain subdued?
See, if you look at Hero Motocorp, it is also showing a very classic rounding bottom kind of a pattern. And I think it is going to follow what Bajaj is doing. The overall sector is looking good. The auto companies are doing exceptionally well. And Hero Motocorp is well placed as per the chart. And we can expect a target on the upside to be around 3,400 and possibly higher. So one can create long positions here, not only from short term, but from medium term perspective also. And on the downside, one can maintain a stop of around 3,115 levels.
Moving on then, let's talk about GPT Infra, and this particular counter has surged to over 5-year high in today's trading session, and the reason for that is actually not not earnings. If you look at the stock, it's gaining for a 7th straight session. It's bagged an order worth about 739 crore rupees from NHAI, and it is for construction of new 4-lane Raj Southern bypass on NH19 in the state of Uttar Pradesh. On back of that, you can see the stock is surging in trade. In fact, I would like to refresh the screen, but yes, it's hit an over 5-year high today.
Okay, that is GPT Infra for you all. Keep an eye out on that one. Let's move on. And Ashish, Jindal saw, what are the charts indicating for this one? What is the technical level that you're keeping an eye out on?
See, if you look at the overall space, there has been some pressure, but if you look at this stock, it has performed well, and I can say that it is about to break out from that 385 level from where it topped out earlier, and it's just breaking out from there. So I think there is much more higher room left here, and we can expect a pattern target of around 420 levels. On the downside, the support for the stock is going to be around 370.
All right, Ashesha, coming to you, SJVN, why is this one in focus today?
The win, and the stock is holding up with gains of 0.7%. The company yesterday informed the exchanges that they have offered power to the beneficiaries of northern region from the 1000 megawatt solar power project to be developed under the CPSU scheme. Apart from this, they have also informed about the order win, where the company said that Jammu and Kashmir Power Corporation and Rajasthan Urja Vidyut Nigam Limited have given their consent to purchase 600 megawatt and 500 megawatt respectively, which will be done at a tariff of 2.57 rupees per unit. So on the back of this news flow and an order win that has come through, this counter is gaining in trade today, sitting with gains of 0.8% as we speak.
Okay, that is SJVN for y'all. Let's move on and talk about IndusInd Bank. Couple of news flows coming in here. Lisa, take us through those news flows.
Right, so first is on the result. So IndusInd, they reported healthy set of numbers. The NII, that was up around 18% on year-on-year basis. PAT was up 23% on year-on-year basis. Even the brokerages, they are quite upbeat on the stock. BofA has maintaining a buy on the stock. They have hiked the target price to 1,750 from 1,650 earlier. They say that Q2 has ticked all the boxes and there is scope for re-rating going forward for this company. And also the healthy loan growth momentum that has been seen across the segments. Stable NIMs as well as credit cost that is expected to decline further in the second half. And Jefferies is also, they have also hiked the target price to rupees 1,800 from 750 earlier. They say they are holding well to the margin, and slippages were a bit higher, but that doesn't dilute the quality of the book. So both these brokerages are quite upbeat on the stock, but also the Q2 shareholding that is out, and the FII holding that has decreased to 62.6%. So that means IndusInd could get included in the MSCI index. That will be in November 2023 review, and that is because they meet the minimum the minimum headroom requirement of around 15%. So on the back of these two news, IndusInd is surging away in trade. It's up around 2% as we speak.
All right, that is interesting for you, but let's talk about an earnings candidate today, Ashish. It's HUL that will come out with its earnings, but do you think that the stock will be able to now at least perform on the charts?
See, if you look at HUL, we can see that FMCG counters have been outperforming, but HUL has been an underperformer for quite some time. Given the today's movement, we can see a bullish candlestick pattern forming here, some kind of a buying emerging after opening a gap down. But I think the stock is going to move higher towards the level of 2620. Once it breaks that 2570 level, so 2570, 2580 is a major hurdle. If that is broken, then I think 2620 can be seen on the card. And today's low, which is around 2522 level, is going to be an important support.
Okay, surely keeping an eye out on HUL's numbers as well as those levels that Ashish mentioned over there as well. Let's move on, talk about ICICI Lombard, and why is that one in focus? It's on the back of its numbers. Good set of numbers was reported by the company, and a surprise that came in was a combined ratio of 103.9, was better than what the street was expecting. Other than that, the management has maintained their guidance of the combined ratio at 102, which they'd given previously as well. So they're maintaining that guidance in terms of that as well. Overall, when you look at it, management said that the expenses in the first half of FY24 were lower on a year-on-year basis despite all the investments that they made. And obviously, what brokerages are saying, whether you look at a CLSA, they're maintaining a positive view on ICICI Lombard, given a target price of 1,550 rupees per share. Actually, they've raised the target price to 1,620 rupees from the previous 1,550 rupees per share as well. The underlying trends are quite strong for the company as well, is what Morgan Stanley is highlighting in its note as well. And they too are positive on the stock. They're maintaining an overweight rating on ICICI Lombard. So, good set of numbers. Positive outlook coming in from brokerages as well, and that is why the stock is holding on to some bit of a gain as of now, 1% uptick, so approximately.
All right, moving on, let's put the spotlight then on Coforge, because Coforge actually come out with their numbers this morning itself, and it was a good set of numbers coming in from the Coforge. At least when you look at the management, they've actually maintaining the fact that they will be able to meet their FY24 guidance. In fact, we also spoke to the management, just taking you through the highlights of what the management actually spoke on ET Now. One is that they did confirm the fact that they are confident of achieving about 13 to 16% constant currency growth in FY24. The company is now actually focused on execution. Also, they've delivered 16% growth in H1 despite seeing macro headwinds as well. And no doubt, he did speak about the Q3 furlough, saying that it may be higher than usual. But talking specifically about the guidance, let's actually hear out with the man himself, Sudhir Singh, who's the CEO of Coforge, talk about it with us.
The guidance that we gave was at the beginning of the year, in a year where there's been significant macroeconomic volatility. At the beginning of the year, we gave a very assertive, a very aggressive guidance of 13 to 16% CC growth. At the midpoint of the year, as you noted, we are growing 16.2% in CC terms. I said this earlier in the investor call as well. The guidance that we gave at the beginning of the year is a guidance that we intend to deliver upon, and we believe that we will. We're already in Q3. Month one is about to get over. This year, the furloughs are going to be materially higher than they've been in the past, and that's largely a function of the macro stress that everyone's talked about and that we also experience on an ongoing basis. In a year like this, in the first 2 quarters of the year, which have really been extremely demand stressed, we have still delivered a 16.2% CC growth. As we look at the future, we are confident, irrespective of which way the penny falls around demand, whether demand revives in Q4 or not, the number that we've guided to, we will deliver on. When we look at the demand environment, we believe it is going to continue to stay stressed for the rest of the fiscal year.
Okay, let's move on and talk about Galaxy Surfactants on the charts then. And Ashish, when you look at it, this stock has not done much in the last 6 months as well, just 9% return. What's the new view now coming in for Galaxy Surfactants?
If you look at Galaxy, the stock has been consolidating in a broad range. It has not done much, but over short term, I think the stock is poised to move higher. It is forming higher low pattern, which is bullish, and we can expect it to move towards the level of around 2840 on the upside. And on the downside, the support for the stock, which is the 20 days average, is around 265 level.
Right, moving on, Lisa, let's talk about Bandhan Bank and how are the numbers for this one?
Right, so unlike what we saw in IndusInd Bank, Bandhan Bank has reported a miss in its earnings. It's down around 3%, and the miss in its profitability, that has been around 4%, and even the NII growth, that was quite sluggish. Margin was steady, and advances growth was also moderate at around 13% on year-on-year basis. The asset quality also has deteriorated. The GNPA, that has increased by 57 bips on quarter-on-quarter basis to around 7.3%. That has led to elevated slippage run rate, and also the higher OPEX rate that has kept the cost-to-income ratio elevated at around 47%. That has suppressed the PPOP growth as well. SMA book, that has also declined on sequential basis. Now, the bank has suggested that the loan growth, that will see a strong recovery in the second half. So on the back of this, even brokerages, they are quite bearish on the stock. Motilal Oswal has cut the estimates for FY24-25 by around 3 and 5% respectively, and they also estimate the ROA to be at around 2.1% in FY25. And on the back of this, they have retained their neutral rating with the target price of around 250 per share. So we can see flashing on the screen, Bandhan Bank is down around 3%.
Okay, that's Bandhan Bank, but let's move on and talk about Shyam Metallics. Ashesha, why is this one in focus? Why have we picked out the stock?
Well, yes, the stock is in focus on the back of an acquisition. The National Company Law Tribunal Mumbai branch has approved the resolution plan that was submitted by the company. This was for acquisition of Mitsal Corp, and this acquisition has been done at a consideration of about 300 crores. Remember, it was earlier last year, rather in December 2022, when the company had gone ahead and disclosed to the exchanges about acquisition of this company. Now, the legal authorities have given this power and have approved this acquisition of about 300 crores. The stock is holding up on account of this acquisition news that has come in, 1.2% higher in trade as we speak.
In fact, Ashesha, we will also let you go and rest of our panelists, because Ultratech Cement numbers have just come, and I know that Ashesha will get busy with it. But the initial numbers that we have, if you look at the PAT, is coming at around 1,280 crore rupees as a consolidated PAT as per agencies. Consolidated revenues have come in at around 16,010 crore rupees. If you look at the consolidated PAT, if you compare it on a year-on-year basis, as per the numbers that I have it in front of me from the agencies, then it's an uptick, because 756 was the comparative figure on a year-on-year basis for PAT, and for revenue, it was 13,890 crore rupees on a year-on-year basis. Let's actually compare that with what our poll was expecting. So we were expecting a PAT to come in at around 1,245 crore rupees. It's come in at around 1,280 crore rupees. The revenue that we were expecting was 15,802 crore rupees, while the revenues have actually come in at around 16,010 odd crore rupees. So yes, if you look at the numbers, tad bit in line with ET Now estimates, that is Ultratech Cement. For you, I'll request my producer to actually revise the graph, because I believe there is a change in the stock price. The stock is actually now turned into the positive territory. It's no more in the negative territory. It is in fact turned positive. So as you can see on your screen, the PAT is coming at around 1,280 crore rupees, in line with ET Now estimates of 1,245 crore rupees. The revenue has come in at around 16,012 crore rupees, as against the ET Now poll of 15,802 crore rupees. So can say it's an inline set of numbers coming in for Ultratech. We will get you some more numbers and more reactions from the analysts on those numbers in a short while. But for now, we are totally out of time on this edition of Market Fatafat. Stay tuned. Closing trades coming up next.
The stories that can move an entire economy, drive us to break obstacles.
breaking news